We're in this sort of box here, and yet the markets rally. We want to take this at face value in terms of the situation is unsustainable. Tariff levels will, in fact, come down.
Yeah, so for a myriad of different reasons, we find ourselves with one of these, and I'll use the term wacky Wednesdays. First, you gave me a mango for fruit. You typically give me an orange.
It was a joke because it's so hard to eat.
A mango
exactly, that's why I gave it to you.
Correctly. Second, we have a reunification of the old options action team right before our very eyes. Coco beware from parts unknown. And third, the fact that you're trying to navigate this market with headlines coming out left and right. I mean, yesterday, obviously, in the aftermath of what we heard, was a fascinating move. I will tell you, though, today's move was not all that encouraging to me. 10-year yields, which cascaded lower, went the rest of the day ratcheting back higher. I think they closed unchanged around 439. The VIX at one point today was back above 30. So, yeah, the rally made sense, but not to the extent that a lot of people probably hoped for.
Yeah, and the other thing is Monday. Let's just think about what happened here. We came in, all we read about was bearish levels, sentiment levels, you know, the April decline, biggest in 100 years.
Powell out.
I mean, yeah, it was, you know, everything. It all was at once. On Monday at 5 o'clock, the silver lining guy was a bit bearish, too, you know. Wow. And so, I mean, listen, I don't think anyone was pressing lows right there. It didn't make a whole heck of a lot of sense. But I think the guy's point about how the rally faded a little bit today, I think suggests that there's not a lot of confidence in the back and forth that we've seen since Monday as far as the narrative as it relates to tariffs. And so, really, earnings are going to take, I think, center stage right here. Obviously, we're in the middle of it right now. It seems like some of the names that we've been watching have done okay. As far as tech so far, you know, Tesla's was an absolute disaster. It rallied a little bit. I want to go back to Raytheon and Northrop yesterday. They were both down 10%. These are two massive contractors for the U.S. government. They employ 300,000 people together. You know, that's not a great look, and we keep hearing about these exemptions that might come from the autos, that might come from Apple, might come from all these sorts of things. If you give every industry an exemption, are they tariffs? Are we in a trade war? Like, what are you trying to accomplish? What are the concessions that you're trying to get out of? And you just use the term in a box. I think they've backed themselves into a corner. I don't think we actually know what they want to achieve right here. Is it the lower trade barriers? Is it to protect IP? Like, what is it? Do we want them to buy more stuff? Like, I don't get it. They're 30% of their...
Do they know, really?
No, I don't think the administration knows.
No,
and I think the Chinese, unless they see a deal from Canada, from Mexico, from the EU, from Japan, they're not jumping first. You know, and I'll just say one last thing. January 2018, that's when the trade war really started in the first administration. They did not have a signed deal for phase one until January 2020. It took 2 years.
I mean, as the primary sort of event of the last days is the vol crush, right? Meaning this unbelievable spike in volatility associated with the drop in the equity market, and then an equally impressive bounce, leaving us literally at the midpoint from the high of February 19th, from which we plunged, to the low. We were down 20%. So it's really a jump ball. This is what a pair of twos is, meaning there are big hands where you bet big and you say, I've got an advantage, I go for it. And there are moments where it's best to be small. So this is a small ball moment in general, I think, if one's playing SPY and that kind of thing. But we are not going to get resolved anytime soon. We have goalposts almost. The highs of February 19th, the lows of 2 weeks ago were up 13, 14% off their lows. And this churning is, I would call it high volatility but low variance. And at the end of the day, it's an opportunity for traders, but you also can get flummoxed and get twisted and get it exactly wrong. Very hard, and yet that's the opportunity.